everyone, K-Kim here. Today's April 13th, 2018, Friday. Hope you guys had a good week trading and investing this week. Welcome to the market update. Today we're going to be looking at Spider, Diamond, IWM, Qs, and Gold, GLD, and we'll call it a day. Let's first talk about kind of a primary term support here, which we've been talking about. This rising uptrend support coinciding with that 200 SMA. Just following up from what we talked about last week. We talked about last week, if we do break below it, there's a chance that there could be a trap before going higher. Well, this time it decided that it wasn't gonna break below it and actually start to make its move. Actually, what I do want to talk about is we have a very constructive move in the minor term. So let me talk about that. First, let's go to 65-minute chart. Kind of talking, this is what we're talking about last week, right? So this is what we've been talking, actually last couple weeks here, we've been talking about this. First, we talked about this bullish divergence, right? So you got the lower low on the price action. We got the higher low on this oscillator. Thus, there's a bullish divergence. Basically, what it's saying is there were buyers accumulating, even though there were sellers bringing it down and the wind is coming down because there's a lot of fear. You can see because we're in a downtrend. But there were many who are holding their positions and adding into it. And so that this downside pressure was not as much as we thought it was, as the oscillator cultivated higher low. And then from that point on, we can see that bulls took advantage of that momentum and then brought the market back up. And we've been pretty much moving sideways here, but let's zoom in here a little bit and talk about it. And we also talked about last week or a few weeks ago, this Fibonacci, right? We talked about this. This is a last level to hold, right? You can see that right there. Not only that's the level of prior support and prior resistance, that's the level coinciding with what? My last level of my Fibonacci. So obviously, we needed certain evidence that this level was going to hold, right? And so what we saw was that kind of a bullish piercing type of candle, right? That bullish piercing is basically, it pierced kind of a, near 50% of prior day, down day of body, like 50% of its body. So that's what we happened because it closed it. I think that what the real dagger was for the bears was that gap up. So I think that really confirmed that bullish piercing candle, especially that was a good location, right? This is a location. You can see that it's a prior support, resistance, and support. And we can also kind of adjust this a little bit this way, right there. So you can adjust it a little bit this way, and you got that support line there. So this is a lot of things were happening at this level, as you can see. Again, the last level of fib, prior resistance and support, which I call pivot, and then rising uptrend support. Not to mention we had that bullish divergence on that oscillator. So this was a very, very important level. I think this is what I emphasized last few weeks, and we saw that gap up. That gap actually remains open because you can see that this is a word gap area. So I can't even draw that little box there. So that gap remains open, and this gap still remains. So we got two gaps open. We're gonna go back. We're gonna flip back to daily chart. We're gonna talk about those gaps, why those gaps are hinting that this bullish move could continue going into next week here. But I'm gonna spend a little bit more time here so you can see we got up here and we got that gap up that kind of solidified this bullish piercing candle. We got up, and the good news was we got up and came down, right? And the good news was that if the buyers protected this gap, and again, we're gonna go back on the daily chart. I want to talk about this, why this was important, but protected the gap. That's important. So this right there, this was a battleground for the buyers in the minor term. They protected it. Oh, actually, this was a gap right here. I almost forgot to mention right there, that was a gap. So we actually got three gaps. We got this gap, because this is where it closed. We open here, so we also protect. So buyers protected this gap when the bears came down, threatened to fill that gap. They were not successful at it, and we got back up. We gapped up, came down. Bears trying to fill this gap again. Bears trying to fill that gap again. Bears trying to fill that gap again. Failed 3 times. So these gaps still open. That's a good sign. We gapped up again here. And then you can see where now bears are threatening to fill that gap once again. You can see right here. Just like what? Just a couple hours ago, buyers are protecting this gap as of today. So just looking at this here, it looks like this is going to be important level. Obviously it is, because this is a prior resistance level right there. You can see this is important level, prior support acting as resistance. And then we attempted to gap up at open, kind of fell back here, and this is a gap there. So let's actually go to daily chart and then talk about these gaps. So when we go to daily chart, you can see this is a big gapper. So there are many gaps. There are many downside gaps. We got this gap, we got this gap, we got this downside gap, and we got this down. So we got 1, 2, 3, 4 downside gaps. And until just this week, we didn't have any up gaps for the buyers. We had these selling gaps to the downside since late January, but we didn't see any up gaps for the buyer, for the bulls. Well, now we do have these gaps for the buyers. So what the buyers want to do next week, buyers want to protect this gap, open these gaps, sustain this gap, so that we could see this jump start continuing next week and then start closing out these downside gaps, right? I think if we can do that, we can continue higher. What the buyers don't want to see is bears start coming down and filling this gap. I think if it does get filled, I think they do act as support. A lot of these gaps, that's a good thing about gaps, is that when the gap area a lot of times act as pivot, gap fill act as support or resistance. So if it does come down and fill it, then it could act as support before bouncing higher. But at that point, if we do fill it and then it gets up, and if it doesn't fill this gap and then kind of gets rejected here, then things can get hectic for the buyers. So the best possible scenario would be then buyers protecting this gap, opening this gap, and continuing to rally next week, and then filling these downs. That would be the best possible scenario. So let's see how it plays out. We'll follow up next week on this, and then we'll continue with that. Let's go to diamond here. Diamond, similar scenario. We got some tiny gaps, not as prominent as a spider though, but I think we're kind of stalling here. Here's a good news about diamond though. So diamond here, let me put some of these air pockets in. Here's a good news about diamond. Diamond, we had gap, the downside gap right here. You see this downside gap? This downside gap has actually been filled. So now Dow Jones Diamond bulls are starting to close out these downside gaps, which is a good sign, because on the spider you can see it hasn't been filled yet. Maybe that's what the bulls want to do next week. But diamond, you can see that this gap has been filled. That's a good sign. But again, like what I said before, when the gap gets filled, it does act as resistance. So instant resistance. So you can see we filled it, and then we're kind of seeing some bearish move there. We got a tiny gap here, a little tiny gap. So let's see if we can, keep this gap open before moving higher. If we do come back lower, we do have a 20 MA in that vicinity, potentially the next level, micro term support, and we'll go from there and see how that plays out. We'll follow up next week. Russell 2000. See, the Russell 2000, something I've been talking about Russell 2000 is unlike Spider, because Spider kind of came down, kind of made it like a slight lower low, right? And then like Diamond kind of like equal low or lower low. Let's see here. Yeah, a slight lower low, like here, right? Well, Russell 2000 is not, it has not made a lower low. It's actually still in a higher low stage. You can see that right there. That tells us that there is kind of a more bullish sentiment. There's a more bullish connotation. There's a more bullish wind blowing to the upside on the Russell 2000 as the buyers protected this level right here. Not only that, you can see, I mean, 50 MA or above 50 MA on the Russell 2000, while the Spider, we're struggling at that 50. 50 is acting as a resistance actually today. Same with the Dow Jones. We're struggling at 50, and you can see on the Russell 2000, we're staying above 50. So you can see that these nuances, right? These subtle differences kind of makes a whole lot when you're looking at things in this light. So I still think Russell 2000 is going to do well this year. I think Russell 2000 is going to lead entire market. I actually recently wrote an article 2 days ago. You can just go to my blog, 2tradersclub.com, or you can just Google this title. Russell 2000 small caps could lead the entire market. So I do believe that Russell 2000 will do well this year, and I think Russell 2000 is going to outperform the NASDAQ and the S&P and the Dow this year and possibly next year. Obviously this analysis is still applicable today. Also, I talked about S&P, be greedy when others are fearful. I written 3 weeks ago, still applicable today. So be sure to read those analysis if you haven't. So Russell 2000 looking much better. Not only that, Russell 2000 actually cleared above the neckline. So if I actually go to 65 minutes on the Russell 2000, it's much more bullish signal, because now for the first time in a long time, Russell 2000 has come out of this consolidation. We have now initial confirmation of this inverted head and shoulders. And in that process, we have cultivated higher high. We're now cultivating higher lows, possibly coming down to cultivate higher low again, and before going higher. So you can see that 50 EMA on this 65-minute chart acting as resistance. Something happened here, and now it's getting back up. So you can see that in the minor term, minor to micro term, the wind has shifted. Now wind is blowing to the upside on the Russell 2000. Again, it's a different scenario in the S&P and the Dow, but Russell is leading already. So I think this is a good sign that S&P would continue to lead. NASDAQ also, you can see, is struggling at 50. So even though NASDAQ made all-time high, none of the indices did that. Spider didn't do that. Diamond didn't do that. Russell didn't do that. NASDAQ is the only index created a new all-time high before falling, even though it was ahead of everybody, still struggling at that 50 EMA today. So just looking at the 50, you can see that Russell is leading now that 50 is holding, or the price holding above it. So I think NASDAQ is most vulnerable at this point. I do believe that NASDAQ is gonna weigh other indices down this year and possibly next year. I think a lot of these these giant tech companies, Facebook, Google, Amazon, Nvidia, Apple, I think they're gonna start to struggle. Doesn't mean that they're gonna start pulling back or start crashing. I just think that they're going to either start to consolidate, start to pull back a little bit. I think the NASDAQ is going to struggle this year, and I think because of NASDAQ, I think it's going to weigh other indices down. I think S&P, Russell, Dow, they really want to move up, but I think the NASDAQ is what's going to kind of weigh down these indices. So I think this year probably going to see a lot of volatility as the market tries to make its move to the upside. As the market starts trying to make its move, I think there's going to be kind of a lot of volatility throughout this year. Though I still think the market is going to do well this year, but I think the NASDAQ though is still looking most vulnerable. Still have that island reversal there. I mean, there's a chance that we could do something like that. Or it could be consolidating for a while. I'm not sure, but I just think that NASDAQ is going to be struggling this year. Let's go to gold, and we'll call it a day. Gold, some volatility here, but what I actually really like about gold is looking at monthly chart, but I'll go to it for now. We're still consolidating. We saw kind of a jump start, gap up, attempted for a run, breakout above this, and quickly came down, did a little bit of a, gravestone doji, kind of a shooting star type of candle there. And then we gapped down, and then today we're gapping up. So we're still kind of dancing around in this level. But if I go to monthly chart, we're seeing a little bit of better picture here. I want to kind of focus. First of all, we have cleared this long-term resistance, which is a good sign. Prior resistance acting as a new support, that's a good sign. I think if you throw a Fibonacci here to here, that's the middle level, 50 or last level. And then we broke out of it. We have this uptrend support there. That's a good sign. But what I really like about it is here, I want to look at this oscillator here. This is stochastic. You can see this monthly stochastic, we're seeing these stochastics still rising, kind of giving us that bullish momentum still being there, right? I was kind of wondering if we were going to roll over, because you can see it had a little bit of downside turn right there. I was wondering if this was going to start rolling over like this. Then it would have been, I think, kind of a bad situation. But knowing they were still getting up, I think in looking at a long term, that could be a good sign in gold. And so we'll have to watch and see how it plays. And obviously still needs to kind of break out of it, you know, in this consolidation. It's never easy. Every time when you look at consolidation, it's never easy. It's sometimes it's smooth, sometimes it's not. But we'll see if we can, you know, maybe prior resistance, new support, prior resistance, new support. Sometimes it's a smooth breakout. Sometimes a head fakes, trap, shenanigan before breaking out. Sometimes it breaks out smoothly but comes back, retest before going higher. So we don't know exactly how it's gonna break out. But you know, a lot of times this consolidation, especially it's been 5 years, it's normally a bullish signal, but obviously we need a confirmation of that, and so we'll see how that play out. We'll go from there. Well, that's for me this week. So next week we'll follow and see how it plays out. Hope you guys have a wonderful weekend, and good luck trading next week.